Good morning, traders. Welcome to Beyond Profile. Today is April 12th, and we are going to be gapping down this morning out of our little balance area here from several days. This is coming on the news of the Japan nuclear plant raising its threat level to 7. The highest levels, the only one that's ever been that high was the Chernobyl one. So we're gapping, though. We're going to be gapping right to a very big high volume node on the composite from last month, which was this 11 number. You can see in the overnight session we've gone down to this area. We've actually defended it several times, and I'll have to look to see if this is going to hold for us. I can see a bounce, equally back to, from that area back probably to 19s, 20s here, to kiss off the breakdown area, if you will. So this morning, if we've got some trade balance news coming out at 8:30, if this doesn't break down any further, we could see some defense in here, because they did hold us up in this area all night here. It hasn't dropped. As a matter of fact, the 15-minute chart is making higher lows, but it's almost like a bear flag pattern, which what I would think we could come back down to it one more time here. So we're at a key level. Question is do we hold the key level? Usually get a bounce off of these significant key reference areas, especially a monthly point of control like this at the 11s. This is a significant number for the markets. And then, like I said, if it can bounce here, bounce back. Anybody wanted to take this, those who are buying these 10s and 11s, back to the breakdown area, back to that 1920 area here, yesterday's settlement area, 20s. And then watch to see what it's going to do. And depending upon, remember, this week is options expiration, and the last time we had options expiration, the market was down over here on the Japan news, and what happened leading up into it. Okay, they rallied it, bought call options really cheap. So we've got to keep those games in mind here as we get the week unfolds, because today's Tuesday already. We got Friday, 4 days away. How far do we drop back? And there's not much. When we start getting below the 10s, then we go down to the 3s, 375. That would be the next area for this. And you can see you have some prior pivot lows here, also at the 3s. But this morning, we're going to see if we can hold these 10s from the overnight session here, get a bounce to 19, probably look to sell that, and then come back to here and see what's going to happen in this S&P market. Let's take a look at some of the commodities yesterday. Most of them broke down hard, but a lot of them retraced here also. Here's the oil chart. You can see yesterday really nice push down to the prior P formation breakout area, 08s. Came right to it, bounced last night back almost a buck and almost $2 as a matter of fact, went to 10s. So this 8 number here back to the 10s, very nice bounce in that. But big wide range engulfing pattern yesterday, and a lot of commodities sold off yesterday. Even gold dropped back down to the last area that was actually a buy last night, was that 1455 area. I think that's even bounced back very nicely. Actually coming back down. Yeah, went all the way back to 1466 and change last night from that 1455 area. So these commodities, again, a lot of volatility lately, a lot of big movements, and even crude oil last night, yesterday. That's a big move for crude, because you consider we were up here almost 13s, we dropped down to the 8s. It's a huge move, engulfing pattern. Tepid bounce here. If we break below the 8s, then it's going to send us back into this prior area over here. On the daily, it actually looks like you have some sort of a trend line here going on too, that would line up right with the area of the high volume node here. See that? So, but again, this point of control down here at the 8 is big. This is a big number, because this was a stage 3 for almost 4 days, and then we had our continuation up and out of that area. So that was a potent area for this market to launch from. In our 4 stages of market activity, that's what you would be looking for. Now, this would actually be a stage 4 right straight back down. Those of you following on the 4 stages of market activity, with your vertical development, your stopping price, and movement right straight back into the high volume area here, and stopped and went completely from a 1, 2, and then a 4 right straight back into that prior P formation. So the oil market, I would watch, see if it gets a tepid bounce today. Maybe even a 50% retracement would put us at around 1050s, 1060 area here, and then roll over and see if it can break into this this prior balance area that we saw in the marketplace. Let's look at the NAS real quick here. The NASDAQ chart. This overnight session, we're right against these pivot lows. We're actually broken the point of control from last month, which was 2318s, and the next area that I see is like 2282s down here. So the the NASDAQ somewhat in a big old funneling formation too. If you take those prior lows from December and these lows back from March, you can see that we're channeling inside of here. The NASDAQ has been a lot weaker. It's gotten kind of slammed a little bit more recently. Never got back to the prior highs of 2,400 when the rest of the markets were flirting back with that level. So the NASDAQ, in turn, if it wants to be a little bit stronger, watch for that to come out of the hole because it's been beaten up a little bit more. And watching for these areas right here, 2280s to this 2296 level could be the area for the NASDAQ. It'll depend on what the S&P is going to do today and the days to come here on this. All right. So keep your powder dry. Look for these lows to hold, especially in the S&P down here at these 1310s, 11s. I like to see that, and then the bounce back to the 18 to 20 area today would be a nice little trade right after the number this morning. Okay, folks, have a good trading day, and we'll see you in the room.